Bitcoin absorbed the macro shock first. Now stocks are starting to bleed. Here is what happened, and why it matters. Bitcoin hit an all-time high of $126,000 in October 2025. Then the US-Iran war broke out. Traders ran the classic playbook: buy Bitcoin as a war hedge, ride the volatility. The thesis failed completely. Oil crossed $100 a barrel. That killed inflation expectations, which killed the Federal Reserve's ability to cut rates, which crushed risk appetite everywhere, crypto included. Bitcoin fell below $67,000 on March 27. Nearly $300 million in leveraged long positions were liquidated in a single day. 6 times more longs than shorts getting wrecked. And that wasn't a one-off, it happened 5 times in 10 days. The traders kept buying the dip. The dip kept falling. Now look at the Federal Reserve. In January 2026, prediction markets priced a near zero chance of 0 rate cuts this year. Rate cuts were essentially guaranteed. Today, a 40% probability of 0 cuts. That is the fastest Fed repricing since the 2022 tightening cycle. The Strait of Hormuz, which handles 20% of global oil transit, has been disrupted by the conflict. Oil stays elevated. Inflation stays sticky. The Fed stays frozen. Richmond Fed president called hiring conditions fragile. The Philadelphia Fed flagged new risks to both inflation and growth. That is stagflation language, the worst of all monetary policy worlds. On-chain data from Glassnode tells us exactly who is selling. Small retail holders, wallets under 10 Bitcoin, are near panic distribution. Their accumulation trend score is near 0. Meanwhile, wallets holding over 1,000 Bitcoin are sitting neutral. Not selling hard. Not buying yet. Just waiting. Here is the critical point. Bitcoin has already taken its hit. Down 45% from the all-time high. The correction happened. US equities have not fully repriced. The 10-year Treasury yield hit 4.5%. When yields rise, the entire valuation model for growth stocks breaks down. $17 trillion has been wiped from peak across global assets, and stocks may have more to fall. Bitcoin absorbed the shock first. The S&P 500 is still catching up. Watch the 10-year yield. Watch the Fed language. The next major move is in equities. Full analysis at blackwire.world. Follow Blackwire for daily intelligence briefings.